Good day, everyone. I hope you are enjoying your weekend. Today is August 1st, 2020, and I'm going to cover gold, silver, precious metals miners, as well as the dollar index. Let's start with August gold futures chart. Gold broke out from flag shape formation on July 20th and advanced to all-time high $1,980, adding 3.6% on a weekly basis, and finally closing at $1,971. Even though gold doesn't have any standing historic resistance after it cleared its 9-year high at $1,911, yellow metal struggled to overcome $1,975–$1,980 range over the last few days. To understand why gold is getting rejected at this level, let's switch to 5-hour chart. This is a 7-month-long rising channel formation that has been tested numerous times, with one exception when channel was broken down in March 2020, at which point buyers quickly stepped in to push gold back above the support line. The reason why gold is getting rejected at $1,975–$1,980 range is clearly visible in this chart. The upper band of the channel presents a resistance and holding gold's advance. Now the question is, could gold break this upper band and continue rising higher? Absolutely yes. However, let's have a look at a number of factors in order to come up with a higher probability scenario for gold over the immediate future. In my opinion, gold should top under $2,000 level in the present cycle. Let's have a look at factors that suggest short-term correction in gold. Firstly, gold has made almost $200 run, and we cannot expect it rising without a consolidation. Secondly, gold has reached the upper band of the channel, which previously led to 5 to 7% correction every time. Third, RSI on a daily basis is in deeply overbought territory, reaching a record 83.5 points. Almost every time, gold corrected after RSI rose above 80 level. Lastly, 3.6% advance in gold pushed senior gold miners GDX by a minuscule 2.5%. GDX should have added 7 to 9%, but that didn't happen. Considering all above factors, my higher probability expectation is that gold should correct 5 to 7% from present levels. Gold could attempt to push a little higher, but quick pullback to $1,850–$1,875 level over the coming days and weeks would be a part of a healthy correction before it resumes the advance to key psychological level $2,000 mark, and then towards $2,500 target over the coming month. Moving on to silver. This is a weekly spot chart. Metal added 7.2% from last Friday, rising as high as $26.20 and closing at $24.41. As suggested before, $26 presents a long-term resistance standing from 2011–2012, which is why silver was rejected immediately after it spiked to this level. Interestingly, despite 7.2% rise in silver, senior silver miners SIL added a tiny 3%, which is a warning that silver might be due for short-term correction as well. Therefore, for the coming days and weeks, I expect silver to quickly pull back to $21–22 level in order to solidify its gains and resume advance to $35 price target over the coming weeks and months. Finally, I would like to focus on dollar index. The index extended decline as expected and reached our target at 93.5 and closed at $93.3. Dollar index broke a 9-year trend line and closed below on a weekly basis, which is a very significant price action from technical point of view. I believe long-term buyers will step in next week to push dollar back above the support line. However, the damage has already been done to long-term trend line. Resistance comes at $94, $95 level, and next target for the index is $88. This is it for today. Thank you very much for listening. Please like and subscribe if you found this video useful. Finally, please note that this video is not an investment advice and created solely for educational purposes. Wishing you a very nice weekend.